Good morning, good day, and good evening, no matter where you're at in the world. My name is Kelly Kellum, and welcome to BitLab Academy. Daily streams every day, Monday through Friday, 10:30 a.m. Eastern Standard Time. Just going to double check that my audio is working. Go ahead, give me a thumbs up in chat if everything looks good, sounds good. We will continue on. We've got a great stream today. We're going to be talking about some of the secrets of TA, the best tool that you can utilize when you're investing and trading these markets, really trading any markets. This is rooted all the way back hundreds of years ago to Japanese rice trading markets, and it's been developed over this 100 years for us to really understand the psychology of the market and give us a sort of leading guide as to what's going on, what's likely to happen, and even map out into the future likely scenarios and likely sort of points that price will interact with, meaning price pushing up and starting to sort of pause and find resistance at a level, maybe even break back down, or even when you might potentially be coming into a trend top or a trend bottom. So you can identify the best setups so that you can get into trades and get out of trades when you need to, so that you can be a consistently profitable trader over time. Thank you so much, everybody, for tuning in. We really appreciate everybody that tunes in here live to the BitLab Academy channel. If you are watching on Hit Network, shout out to you. It's a great channel. If you haven't tuned in there yet, we got 24/7 streaming of all kinds of different crypto content, trading, investing, just general knowledge about the markets. So go ahead and give them a follow. This is also restreamed there, but it's always great to have everybody here live. And if you're watching at any point in the future, don't worry. This isn't just only focused on what's happening in today's market with the price action right now. Although we will utilize that, we really try to break down tools, strategy, tips, and tricks that you can use at any point throughout your journey within crypto investing and trading. I want to also point out that we definitely focus our content around blockchain, crypto, Bitcoin, altcoins. However, many, if not most of these tools and sort of experience and knowledge that we try to share and help you grow can be utilized across really any asset class other than on-chain metrics and stuff like that that is specific to crypto. In terms of the trading, TA, setups, chart patterns, all these different things can be utilized within any sort of asset class that you'll be that you're engaged with. So I do want to just say again, thank you everybody for tuning in. My name is Kelly Kellum. Thank you very much for being here. Please go ahead and hit that subscribe button if you haven't. Hit that like button, ting that bell so you get notified when we go live. And again, thank you again for being here. So without any further ado, make sure you follow these different social accounts there. Those are our BitLab accounts. And mine is, of course, Kelly Kellum, which is at Kelly Kellum. We're just going to do a really brief sort of rundown of some of these things. Again, I always like to see where everybody's from. So go ahead, type in where you're tuned in from. It's nice to see that we got a community that we're building around the world. And again, I've said this several times, I think on every stream so far. We're about a weekend now. Really, really love doing this. My goal here isn't to, build a community to make profit off of you. This community is about helping you make profits, utilize our experience so that you can sort of learn from our mistakes and also shortcut your way to success with the benefit of our experience so that you can get there. And you can utilize and watch these videos at any time. You can watch them over and over. You can pause them. You can start them a little bit later after the stream and move through them more quickly if you want by watching them 1.5 or 1.25 speed. And also I want to also shout out anybody that has any sort of language difficulties in terms of English, because I do speak quick, because there's so much I want to cram into each hour sort of episode that we do here. So we also have the closed captioning, which is the CC on the lower portion of your YouTube screen. You can turn that on if you like, so you can be helped with following along if you're having any difficulty there. So shout out to everybody wherever you're at. We got people in from California, Texas, Ontario, South Carolina, Jersey, North Carolina. We got people from all over the place. So I'm really looking forward to build this community. And that's what this is all about. It's about positive impact on you all, and hopefully encouraging all of you to spread through this space as well and encourage more positive engagement, so we don't have all these different trolls that are all over social media and a lot of these other streams. This is about growth. This is about community. This is about building a family together so that we can rely, share, grow together. So let's just go ahead and jump on into it because we got a lot to cover today. It is January 17, 2023. And again, this video will be relevant to all time frames, no matter if you're watching today or weeks or months in the future. Definitely stay tuned because we are going to be going through all kinds of stuff. And the goal here isn't just to break down the price action and give you tips and tricks. The goal here is to provide you the tools, the explanations, the definitions of everything going on in these charts, the concepts, the skill sets, the strategies. So sometimes I'm going to be breaking down very basic things, but don't be discouraged if you're more on the pro side or if you've had a lot of experience in this space. But we have to make sure, because we have to make sure that we're sending the elevator back down and helping other people get up to the levels that we're at. So that's what we're going to be doing. If there's anything that I sort of breeze over or I talk about a concept that you're not fully aware of, don't worry. Please subscribe to this channel because we're trying to break down everything methodically and really get into it. And I'll also be putting links at the end of this episode, and you're also free to check into the BitLab Academy YouTube live playlist. And you can scroll through the different topics in there because I go through everything from charting, TA, investment strategy, tools, all these things, and I try to break things down. And some of them will be more focused on breaking down things on a more beginner level that are relevant to those lessons. So in this lesson today, this stream, I should say, is more focused on the secrets to TA, which is technical analysis, understanding what's happening within the markets, what's that, like being able to chart onto TradingView, onto whatever charting software that you use, so you can understand the likelihood and the essentially mapping out what's going on and give you some sort of a context of what's going on in the market so that you can engage with it. So let's go ahead and there we go. Not sure why that pulled off, but thank you for being patient with me. All right, so jumping on into the charts here, we can see the general layout of a chart. Okay, this is everybody knows, they've seen this, whether or not you're deeply aware with it or not. This is price action. This is using TradingView. And I do want to just point out, I did a video last week, which I will link again, as I said, at the end of this, which really helps you break down how to do all these layouts. And just a quick recap there. You can click on the time frame. If yours just says D, which is daily, or just has one thing, you can click on that. And then as this menu comes up, anytime you put a star, it puts it up basically as a favorite up at the top. Similarly, if you want to have your indicators here in your favorites listed out as you have indicators. When you search for them, you can just put a star next to them and they're very quickly there. Now, I want to just sort of point out something very quickly here. When you have this set up, when you have this chart that pops onto your screen, of course, there's a sort of standard sort of framework, and I just want to make sure that you do this before you really get into the charts. Make sure, in this case, we're going to be using standard candles, which are these candlesticks. Each candlestick signifying, which is each one of these bars, signifies the how much the price action moved during that time frame, and each bar is representative of the time frame that you have on the top left. Now, what have I said on every stream so far that I've done? And I want you to do this every time you pull up any chart, TradingView, on-chain data metrics, whatever it is. Take a look at how everything is laid out and look at what's available, because you're not just going to be looking at these charts on TradingView. You're also going to be looking at charts, which I will go through here when you're on crypto Twitter or on news media or whatever it is. And so you want to take in all the data that's available to you, so you make sure that you're gathering certain insights from these charts that are intended, and you're making the right decision. So the first basic step, of course, we're looking at the weekly time frame. In this case, we're looking at Bitcoin over US dollar. We see each one of these candle bars is a 1 week candle. So that means 1, 2, 3, 4. That's 1, 2, 4 weeks of information in this period that I'm looking at right between those bars right there. Okay. Now, next thing I want to do is what I like, so it's very easy to decipher what's going on, is come over here on the right bar. If yours is not set up this way, right click on the bar, come down here to labels, put on symbol name. That way you can always know, even if you don't look up here, you make sure you're looking at the right chart. Right click again, come down to lines, go to price line. That signifies across the entire chart exactly where the price is, so you can see if it's interacting with previous price action. And then you can also right click again here go to label and go to symbol last price. That way it's highlighted on this bar right here. And then you're going to come here again to labels. Where is it? Countdown to bar close. It's actually right here, right below lines. Now you can see, this is very important because this is very incredibly important when we're looking at TA. And I do want to shout out, go ahead and put in your favorite altcoin that you want me to look at, because one of the things I'm going to be doing today is utilizing this lesson to teach TA to also do some TA on some various projects, different assets. Make sure, please try not to throw anything in there that's, 400 or 3,000 down on the coin market cap rankings, because we want to make sure that we're doing stuff that's more broadly relevant to the people that are here in chat, and also people that will be watching this later. So I'm going to be breaking that down. So now that we have this set up, I also want to point out that this is, looking at this, one of the things that you can recognize is that this is going from low to high. And the reason I want to point this out is as simple as this is. I've seen so many people, Tech Devs does this a lot, which is a very popular analyst on Twitter. And he's been, published in all kind of different magazines and news media outlets. And he's got a large following. He posts stuff that he gets so much confusing sort of comments on that because people just don't understand what's going on. And that's because I want you to notice if I do option I, this chart is inverted. Now, and you can tell this immediately because if you take the time, if you have the patience, patience isn't just about waiting for price to develop into a setup. Patience is also being humble and looking at everything that's available on the chart. In this case, we can see this is from high to low. So now you can understand what's going on in this chart. And I'm going to break down why people would actually put these charts on an inverted level later. So I'm going to go back, which option I. And again, I just want to point out before we get into this, we have all these tools here on the left. And we also have the star down here you can't see it, but coming all the way down here to the bottom left of your screen, you'll see a star. If you turn that on, yours might not have anything pop up. But I have all these pop up. Why that pops up is because similar to having these set up here with my sort of custom sort of layout of my screen, when I have all my different indicator templates and everything set up here, same thing with these toolbars on the left. You can put your mouse over the tool, and on the right hand, just to the right of it, there's a little arrow, you can click on that and it gives you more options. And then every time you put a little star, and in the order that you put those stars, then it adds them to this bar, which rather than having to come back and forth all over, you could put the bar right near what you're doing. But then again, I also want to reemphasize, you also don't necessarily need a lot of these. Some of them you will, but you can also, without having to come over here to the bar, when you're doing your setting up your charts with your supports and your resistances, your trend lines, Fibonacci's, all these things, you can actually quick key them. Like for instance, right here, I can do, actually I'll do it right here because this is more broadly relevant. I can put my cursor right about where I want and press Option H, and that gives me a horizontal line. If I double click on this line, we can come in here and you can change the color of it. You can change the thickness of it. You can make it dotted line or a solid line. All these sorts of things will help you in doing your charting and your TA on your charts when you're doing stuff here. Another very powerful one, instead of having an entire horizontal line, you can put your mouse anywhere you want. Let's say right here, you could do Option J, and that gives you a horizontal ray from this point all the way to the right. That way, if you want to have stuff not clutter up your screen, it only goes from the relevant point forward. You do Option J, and as you can see right there, I'm starting to get some lines on my chart. Now, and I'm only giving, this is just a brief sort of rundown of some of the things we're going to be utilizing to chart on our trading view, because charting is very tied to using TA, because you have to understand how to put stuff on the chart and mark up the chart so that you can do effective technical analysis. So the next one I want to do is you can do Option F, and that immediately puts you into a Fibonacci. You can click and then drag it for Fibonacci retracement up. And you can also, I'm going to move this, I'm going to turn this off. You can also do Option from the bottom F, and you can do a Fibonacci retracement to the downside, as you see right there. So, and both of these are relevant if you're looking for pullbacks, zones of highly likely interaction on the chart, and also pullbacks from a push up, and also push ups from a breakdown. So that would be from the top down. From the top down on a Fibonacci would be bounces. When you have a breakdown, how high is the bounce likely gonna go? Where's my point of interest? And similarly, you can do option F, which is from the low to the high, and that gives you a retracement where the price action is likely going to have some interaction and maybe bounce. So now that we have those quick keys, which are option H, option H for horizontal bar, option J for horizontal ray from a point forward, and option F for your Fibonacci's. You can also do option V if you're trying to mark up certain points in time, which is a vertical line. If you're trying to do previous highs, you can do something like this, where you just go through the chart, and then you can go, if you're trying to figure out, and this is important in technical analysis, you're trying to find historical relevance on a regular basis so that you can see what's going on with interaction with price as it relates to different symbols, different indicators, different price action movements as it relates to moving averages. This is how you can signify and map out in the future with higher likelihood what's going to happen with the price action. Because when you find something and you do historical analysis, which is, as I just said, going back in time and seeing what the regularity of occurrence is and how accurate that regularity of occurrence is with a certain indicator, price setup, patterns in price, moving averages, and then you can move forward. And that way you can see if a cross on a certain moving average is going to happen. You look in the past, how often does that interact in such a way, X way or Y way, with what happened with price? For instance, MACD is a great example of that. If MACD crosses on the 2 week, I have a chart example right here. Right here, this is a 2 week price action on MACD, and you can see Stock Money Lizards, which are great analysts you should follow on Twitter. They've mapped out, they go on historical relevance here. They go back, historical price action. What's the relevance of every time the MACD crossed bearishly, and what's the relevance of every time the MACD crossed bullishly? And you can see out, they also went through and marked out the amount of time. So you can also see in this case, in this current bear market that we've been in 2022 through all the way through 2022 into now where we're at in early 2023, we're starting to see this is crossed bullishly. Well, now we can look back because we've mapped it out. This is what technical analysis is. We're mapping out exactly what happened every time this went bullish. This marked bullish right here, and they have these vertical lines, and this is what happened following this symbol crossing bullishly, and you can see that. So now this is very important because you want to do this without just being a blind follower of other people that map these things out. These other, whether it be influencers or popular analysts, you want to make sure that you do your diligence and sort of break these things down also. And when you see somebody else's chart that's done something like this, try to recreate that chart. This is some of the best training you'll ever learn, is mimicking other people that you hold in high esteem, that you see are doing things regularly on a professional level. Try to map out charts in a similar way with similar indicators, with similar signals. And if you can recreate the same things that they've done, then you can start expanding your horizons. And then when you mimic what they've done, then you can experiment with it and start trying different time frames with that same indicator. Start seeing if it's also applicable to smaller time frames, if it's also applicable to another indicator. What happens if this indicator, this MACD sort of chart here, what happens if I also line this up with RSI or with stochastics or with Williams percent R, whatever it is? You might even find an additional edge, so that maybe there's something that maybe another indicator that you use signaled on regularity with every one of these, crosses to bearish or crosses to bullish, maybe there's another indicator that you use that can also signify maybe a week ahead of time or gives you somewhat of a front running advantage. So that's what we're trying to do today, is we are trying to make sure that we really sort of break down what we're seeing in the charts. We're utilizing the experience of others, mimicking those things. And then also, if you're already further along in your journey, say you're not a beginner, maybe you've been in this for a few years, but now maybe adding other tools to your kit that you can utilize to give you clear signal in the market, because that's everything in investing and in trading, is finding clear signal in the market that you feel confident about, that you can act on within a strategy that you've established so that you have an edge in the market. So let's go ahead and break down and look through a couple of these examples that I was just talking about right here. So, and I'm just going to go through a couple of these of other people's signals that they've mapped out, and then we're going to go into the charts and really try to break down break down how we can do this on the charts ourselves. So Caleb Franzen, another great person you should follow. And I just want to pause and just say, all of you are going to make it. We're at the bottom of what is about to be a profound bull run. We'll likely have some pullbacks along the way, but I just want to shout all of you out for being here, for sharpening your sword, for investing in yourself in time. Time is the best investment you can ever make, especially when your investment is in education, and you're sharpening that sword right now so that you can capitalize. So shout out everybody, this is all about community, and so I'm just happy you're here. So let's just dive back into this. So Caleb Franzen, great person to follow. I'm going to be having him on the show here soon. But what we're seeing here is he shared a chart. This is, what are we doing? We're looking at everything that's available. This is Bitcoin. This is on the 1 hour time frame, and this is the Coinbase chart. And in this case, we see EMA meaning he has two indicators on this chart, which we can see right here. And each one of these is an EMA. Well, what is an EMA? An EMA is an exponential moving average. So there's predominantly two types of moving averages people use. That's exponential moving averages, which are referenced here in this acronym EMA, and then SMA, which is a simple moving average, which are typically just denominated sometimes as SMA, sometimes as just MA. And what that means is EMAs are weighted more heavily in terms of, basically it's a moving average on different time frames. So this is a moving average that's probably on the 21 or 20, and this is on the likely on the 50, I would assume. I can't see, he doesn't have them marked out here, but one's a shorter frame moving average, meaning it's taking the average of all the price candles in whatever number that is. If it's a 20 EMA, then over 20 bars, but then it weighs more heavily the volume on the candles that are more that are newer, that are more present time. General SMA or moving average, that's not an exponential moving average, is weighing basically evenly all 20 bars, or maybe a 50, or EMA, SMA 200. It's evenly measuring the average of the price over all of those, whatever that time frame is. So he's got two time frames here that are mapped out with moving averages. And then he also has what's known as, in this case, this would be like a bull flag, or almost a bull pennant. It's a little obscure because some people would map this out as a flat top. Some people mapping this out as a ascending wedge, but it's on the top of a flagpole, which we can see right here, which we call a bull flag. Now, I'm going to go through a couple of these charts and break down. The thing I'm trying to point out here is, in this current market right now, on and any day ever, you can have 100 different people do TA on the market, and you will get probably 65 different lenses onto that market and the ways that they're seeing it and the different tools that they're utilizing. So it's incredibly important that you utilize different people's sort of outlook on the market to help test and challenge your thesis on what's going to happen. Also to learn maybe a different lens, different viewpoint that they may be looking at that you've never thought to look at it that way. And also maybe highlight certain things and reinforce sort of a sense of confluence with a thesis that you have. And you don't want to have only people that have confluence with you. You want to challenge your thoughts. So it's important to get on. If you're not on Twitter, it's not the end of the world, but definitely look into different crypto media that has different technical analysts sort of thoughts and viewpoints. So and watch different YouTubers, not just me. Watch BitBoy, watch Crypto Jab, watch Investor Bros, watch Frankie Candles, watch Hit Network, so you can get a broadly sort of defined understanding of the market. So you're challenging and reinforcing thoughts at the same time. Now, and this is going to be very evident as we go through this market. Again, these are different viewpoints that are looking at different time frames using different tools and different maps that they're looking at the market. And then we're going to do that ourselves here on the charts in a few minutes. So now we can come over here. Now this one is looking more at the market cycles of what's going on. He's mapped out the time frame between each cycle, peak to peak, peak to peak, and as you can see, peak to peak. We can also see he's mapped out where the halving is, which we've reinforced multiple times on this channel already, and it's always going to be reinforced and reminded to you on this channel. You've got to always be aware of where you're at in the market cycle, the 4-year cycle on Bitcoin, because this is the most important thing, this right here, and I've reinforced it several times. And I do want to just sort of backtrack for a second because I didn't do it at the beginning. Make sure you're following BitLab Academy at Academy BitLab on Twitter. Our Instagram is at Academy BitLab. You can definitely go and follow. You can join for free the Discord. There's some access there for the free members, which is here. The link for this is in the description. Just scroll down. You'll see the link for the Discord. And also, if you join bitlabacademy.com, you can get access to that. And also make sure you sign up for the newsletter here, which I'll be sending out another one on Thursday. And everybody that signs up by the end of this week, by Sunday, we'll have an opportunity to 5 different people will win lifetime membership to the BitLab Academy courses. And we also have some incredible indicators in here, which you can find right here at Indicators. And I'll be doing some videos on there, some more videos on these here on not on the live streams, but on other sort of streams that we post premiere here in BitLab Academy YouTube. But jumping back into this, talking about the market cycle, it's everything. Well, if the market cycle is everything, we always need to consider 3 cycles that we're in. We need to understand the macro. In this case, I'm talking about the 4-year cycle. Where are we at in this cycle? I'm thinking right now, January 17th, 2023, I'm thinking that we're somewhere between here in this sort of dip here, and potentially here. And that's what we're trying to determine when we do TA. Now, you also need to determine every day that you go into the market, what's your macro and then what's your midterm, meaning, in this case right now, our macro is, we're thinking about where we're at in this market cycle between the 4-year cycles. Then we also think about our midterm, which we've been in a very downtrend right here, but we're looking like we're trying to break out of it. And then we're going to go down to the daily. I'm going to go auto. And then we can think about on our more local, our smaller time frame. And then when you want to find that scalp entry, then you break it down all the way to your 4-hour, 1 hour, and then your 24-minute, especially. And you can pick your time frame. It could be 15-minute, could be 3-minute. It depends on how active you want to trade. But that's not what we're talking about today. We're talking about TA and how we can do this to best serve ourselves in these markets. Just want to make sure everything's good. Everything's good in chat. Man, I got the hiccups today. Had too much coffee preparing to get in here and share all this alpha with you guys. Now, what we're talking about here is the different lenses people have on the market, and how I'm tying that into what I was just talking about with different lenses on the market, also different time frames. You're going to see different charts that are outlined in very different ways. We saw that one on the 1 hour. This is on the. It doesn't say, but it's. I'm guessing it's on the weekly. I'm guessing it's on the weekly or 3 days. But you can see this is you can see on this timeline across the bottom, there's a lot of data here that goes back over a large period of time. So we're looking at the macro, and he's breaking it down through the halving cycle as well as market peaks, and trying to define. We can see this trend line, which is a line that price action has followed in terms of support to the upside or resistance to the downside. So this would be a bullish trend line here. And we can see this trend line is on the bottom, and this price action is moving up and bouncing, as we can see here. And this is a bearish trend line, this is known as support for bulls, and this is known as resistance for bears. And we're looking for those points or those regions of resistance where price action tries to maybe it's going to break through, but no, it gets rejected and comes back down. All this gives us information. When we map this out on the price action, gives us information about what we can do with our trades, whether we're going to long, whether we're going to short, whether if you're not shorting and you're just trading on spot, whether you're going to sell would be a similar thing to a short. A short is a whole different thing. We'll break that down in another lesson, but essentially selling a short is similar to, in terms of profitability, when you buy a long, you buy into the asset and it's moving up and you're making money as it moves up. Similarly, rather than just selling at this point, you can go into a derivatives market like BitGet or Bybit or Binance and any of these exchanges, and you can sell a short, meaning you're selling an asset to buy it later at a lower price. So you're making money on this entire price action to the downside. And that's a whole nother lesson and stream that we can get into. So now we've defined, as we can define our different cycles and our different markets, we can see as we're breaking through this trend line, he has identified that there's a trend line or a general sort of reference to price action moving to the downside. And this is projected into the future. And we can see when that level's broken, it resulted in a strong bullish movement. Similarly here, this broke, it kind of faked out, and fake outs are a whole nother lesson we're going to go into, but they're very important to be aware of. But this faked out, which is known as a bull trap, and the price came back down. Now this became a bear trap because this trapped the bulls that went to the long side. The price reversed back to the downside, trapping the bears. And then now it came back up. And once this was broken with conviction, this turned into a massive bull market. So now we can go here, and this is what he's done. He's seen previous price action doesn't repeat exactly in future bull markets, but it definitely rhymes. In this case, look at where we're at right now with this massive trend line. And what he's projecting here is the likelihood of what's going to happen in the future. So now we can go to another chart, and we've seen this. This is mapping out what's going on with the 2-week MACD. And we're just going to continue. And in this case, he's looking at the market using a similar trend line that you can see, but this trend line is actually where he's dragged the Fibonacci from the tops to the bottoms. And additionally, you can also see that price action interacted cyclically on each cycle historically between the 0.786, which is a 78.6% retracement or extension, depending on how you draw it. In this case, it's a retracement. In this case, look at this. The price right here in 2018, it was going so sideways, so long, and everybody's like, this is the bottom. It's going to go up from here. But had you looked at previous price action, you would have seen there was also a similar fall right here, a lot of price action, and then a breakdown into the 78.6 to the 100% right here. And if you could have practiced good risk to utilizing just this Fibonacci tool, not even using anything else, using just Fibonacci, you could see that there was a potentiality that price could fall down into this zone. Now the likelihood of this going forward is higher because of the regularity and the consistency in which in previous price actions, in previous cycles, price action went to this zone. Now we can see right here, everybody was thinking, are we at the bottom? Are we at the bottom? Are we at the bottom? Well, now that we're in this zone, there's a higher likelihood just on this tool alone that we likely have bottomed based on this tool, because once we've broken out of this zone, we could see that price had explosive move into a bullish structure and continuation all the way up to new all-time highs. So we had a look at this, a push up, a pull back, and then chop all the way up. A push up, a pull back, and then smaller chop all the way up, and then a very interesting time here, which is a whole nother thing we could talk about. But now moving forward to the next one, we can see in this case, this person's looking right now, and this person's very active in crypto, but this person's looking at the SPX, which is S&P 500. Now, why is this relevant? Well, that's a whole nother lesson, but assets work in conjunction with each other, especially in global markets, especially in like these huge asset classes, thinking about the whole crypto ecosystem, Bitcoin, Ethereum, all these different altcoins, and then looking at the traditional assets like gold, looking at silver, looking at S&P 500, looking at Dow Jones Index. All of these, especially the larger Bitcoin has gotten, the more institutional investment has come into it. While this has been incredibly good in terms of what's likely to happen for adoption as those spigots, as those funnels of assets start to, in regulation starts to come in and more institutional money starts coming in to crypto. The problem with it is that also means that we're going to have people that are professional institutional traders that come into the asset classes, and these asset classes for a period of time, I think at some point Bitcoin and crypto will break away from traditional assets and will become more of a hedge against inflation, as people always like to argue. But right now they're very tied to each other in terms of, I won't say the exact movement of what's happening with crypto and what's happening with the S&P 500 and Dow Jones. However, there's a very sort of correlated signal between risk on and risk off assets, meaning assets that carry a lot more risk that aren't traditionally held more stable through uncertain economic times. And on uncertain economic times, money moves out of risky assets into safer hedges, bonds, longer term treasuries, things like this. And so when we're looking in this case, this person is, look at this, talking about Bitcoin, but he's charting out the S&P 500. So you can learn something from just following different analysts on crypto Twitter, and you get a really good understanding that there's broader signals that you can look at beyond just MACD, RSI, and price action. You can also look to what's happening with other assets that aren't directly related to crypto, but have I don't want to say domino effect, but a strong correlation with what's happening with their price action, with what's happening with traders within that asset class, because you'll start to find sometimes an asset class might move in a leading fashion in relation to Bitcoin or in relation to Ethereum, so or other altcoins. So this is very important information you can look at. But what he's looking at here is he's seeing what's known as a broadening wedge. Okay, and a broadening wedge is, and I want to pull this up again. You reference this as much as possible. Come to this if you're not sure what's happening in the charts. If you're looking at the chart and you don't know what's going on, come to this site right here, or become a member of BitLab Academy. We have a whole pattern trading, technical analysis breakdown of each one of these patterns, and I will go over some of them here on these free daily live streams. But I can't cover all of them. But come here and you can come to chart patterns like this, and you can see all these different sort of chart patterns and what's going on here, and also crypto Twitter. But what I want to point out here is this is an expanding, broadening, descending, broadening wedge, and it's expanding is broadening. And when you have this pointed to the downside, very similar to if you have a descending wedge, where picture this being wider at the top and coming down. If it's pointing to the downside, the likelihood is that it's going to break up. A great example of that is this right here. If I'm going to do option T, I didn't say this earlier, my apologies. Option T for a trend line, we can come here like this. We're going to do another option T for another trend line, and we can come like this. And what is this? This is a descending wedge, meaning this is pointing to the downside. And the likelihood, it's I think around 66, 68% of these patterns break out to the upside with follow through. So the thing with crypto, I do want to point out though, when you're doing any TA, And I mentioned it before when we had the fake out. The markets are smaller in crypto, and the further you go down that list on CoinMarketCap, which we pointed out yesterday, this list is essentially, you know, the rank of market caps, meaning how much money is in each asset. The higher on the list, the larger the ecosystem. The smaller the ecosystem. So what does that mean when we're doing TA? It means that the smaller that market cap, the smaller that asset class, the more likely it is, and the easier it is to get manipulated and pushed around. So while there's alpha and signal and awareness that this is a bullish price action, this meaning this is coming down, the likelihood that this is going to break up, the smaller asset class you have, and even within Bitcoin still, you will see price action sometimes come like this, come down, break out, trap everybody, then come up, find resistance, and then break out like this. So you need to be aware of what's happening within the context of what size your asset class is and how easy it is to be manipulated. So when you're doing TA, you're aware of that. But my point back here was that this right here is a descending broadening wedge. But this SPY, if we come to this next chart right here, this is also, you know, this is basically the same chart, but this person is seeing something differently. So that being said, let's dive into the charts, because my point with this is you might do TA and I might do TA and yours might not look just like mine, but it doesn't mean it's wrong. This is a very, very, very sort of subjective sort of art that you may see something and identify things that I never even thought to look at. And that's how beautiful it is. But that's why it's important to watch and follow different people, because you'll get a broad view of what's going on. So let's look at these charts. And we're not going to do Bitcoin. We can start with Bitcoin and then quickly over the next 25 minutes, 25 minutes, go over a couple of different asset classes. So our different assets within crypto. So in this case, as I said, you always want to watch for the breakout and the fake out as well. Same thing could happen here. This could very well trap bulls by people. You know, some people have already gone all in because they're not waiting for what's going on here. So what we want to do is we want to map out the macro and then break down what's happening to the midterm and the smaller time frame. So we have this larger pattern here, and I'm going to do a couple lines, and we're going to see which one is going to be the most likely, and then we can kind of clean up our chart. So again, option T. Let me delete that. Put this back here. So option T gives me another trend line, and I see a bit of a trend line right here. And I like this one better than this one because this one has more bars that it's touching. However, it doesn't mean you need to fully delete this. One of the things I do, and I try not to share these on stream because it gets very confusing. I will basically I'll double click on these and I will make these very dim so they're still there. And then when price action is moving at certain levels, I have potential levels because of past price action, and this level is relevant. This trend line, this support, then I can have an idea where there might be some trouble with price action and such. Now, one of the other things I do, I like to keep the lines that are support blue, and you can do this however you want, and the lines that are resistance red, and it gives you a clearer sort of immediate look at the chart and understanding what's going on. So, and what you want to do when you're doing a trend line, you want to make sure that you're touching as many candlesticks as possible, and that's going to be your most accurate trend line. Now, another trend line I can see, I'm looking at this right here, and I can see it looks like this is going to line up. So I'm going to draw another line right there, and we can see interaction here. I'm going to move this up just a bit. Yeah. So, and this makes sense because look at this: support, 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 resistance, 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 and this broke through. So we're kind of trapped between these two levels. Now, right now, we're doing a macro sort of mapping, and then we're going to break it down. So now coming in here, now what I'm going to do is I'm going to use, I'm going to turn on my favorites down here on the bottom left, and yeah, here they are. And I have them all right here, but I'm also going to show you where each of these are. This rectangle is very important. You can use it to draw regions rather than just lines, because regions often, especially with the, if we're talking about this level right here, rather than having a line, what I'm going to do is draw a region, a sort of box, and I'm going to color code it so I can understand what I'm looking at when I'm looking at the chart. So now you can find, for instance, this rectangle is right here where my paintbrush is, the third one down. You can click on this and then come down and you can find rectangle. You can also find circles if you're trying to draw, highlight certain things like that. But I'm going to go ahead and go to rectangle. I'm going to zoom out. I'm going to put a zone sort of right here. And I'm going to put another zone right at the top of this, and I'm going to pull this zone down to meet the top of this peak, which is a little bit lower, but it's just a sort of price action zone that I'm looking for, not an actual exact price. Because very rarely are you going to map something out on a chart that gets you 100% the exact price of what's going on. You want this sort of general region, because if you have an exact price and it's very obvious, a lot of other people have that exact price, meaning a lot of other people are going to be using that level for either buy orders or sell orders, stop losses, all these things. And you're going to want to adjust your entries or your exits to sort of obfuscate that just a little bit, front run it just a touch, or do it just after, depending on what your strategy is and depending on what you're doing, so you don't get an order that doesn't get filled, whether it's a buy or a sell or a stop loss or a take profit, whatever it is. So I have this region here. I'm going to pull this down just a little bit. Now, one of the other things I'm going to do right here, there's two ways you can do this. You can draw more boxes. In this case, because these are more defined, large time frame sort of moves. And you see right here, the reason I drew this as it was is this is previous all-time high in 2017, but we also have this huge area of interactive price action right here. And look what happened. Had I mapped this in November of 2020, this also would have gave me clear indication when this price was falling, this was likely interaction with price zone and with price action. And we can see right here that there's a lot of interaction with price action right here. And then right here, this is in this level at January 10th, a few days ago. Now, we could see that price action, this is one of the reasons why when people are looking at this, is this a very relevant price action that we broke through? Well, not only was it cascading short liquidations going up, but we also moved through this massive sort of price interaction zone, but also broke this very long sort of trend line that went all the way back to August 2021. Now, what we want to do is we see this level right here. So what we're trying to do at this level is try to figure out what's our map to the upside. Well, there's a couple things that we're going to do here. We're going to do some levels right here. We can see I'm going to do Command J because that's a pretty solid level. And I'm going to leave that orange. That's how I like those. And I'm going to do another level. I'm actually going to do a region right here because of this price action. Now I'm going to do a high right here. And this is another level. This is another region because this is very close. That's quite a bit away. So I'm going to do Option J. Now, one of the last things I want to do is I'm going to turn off auto so this stays fixed like this. I'm going to do Command F, and I'm going to draw this from the top here. I'm going to click and pull, and you can see one of the things I do on my charts, you see how I have these dotted lines that show exactly where my cursor are. I do that so I can draw something here and I can see exactly if it's at this level right here. And you can do that by going into your settings, I think it's into appearance. Yeah. And you come to crosshair and you can do this and make it whatever colors you want. And that's how I do that. So I don't need to pull this all the way over here. We can though, just for the sake of it. And we're going to drag this all the way down to the bottom, which we can see this line right here and have a gray line that goes out across to show that. And now we can see, check this out. After I mapped out my levels first, I can see that this level is key because look at this. Now this is right in the 38.2 or the 382 fib. And this level right here with this previous high and this previous high, right between those and right at this level, we have the golden pocket, which is a key retracement pocket, whether you're looking for bounces coming up or pullbacks coming down. In this case, this would be a bounce coming up. And you have to realize, this is something a lot of people don't realize. When you're doing TA, you're not trying to prove a theory about where price is going to go. You're trying to present the options of where the price action likely has a high likelihood of going, and then plan your course of attack so you can make sure that you are consistently profitable over time. And you're going to miss trades and you're going to miss moves, and that's okay. When you have a map, you can plan for where it's going to go next and be in position. And that's what this is all about: is capitalize on being in position as much and as regularly as possible, as consistently as possible. So now we can see these levels that I've mapped out here in the matter of about 3 minutes. Where I did this level, I did these lows right here, which are key levels. I did this low right here. Ends up being a massive fib. Now we also see that this is a very huge hurdle as we move forward. So I'm going to Command Z, put that back. As we move forward and say price action just starts rocketing up, it doesn't mean we're in a bull market. You guys have to realize that. Anytime you have price action pushing up, you're not in a bull market really on a macro until you break key resistances. In this case, I think there's a high likelihood that this throughout 2023, we're going to get something that looks like this based on this chart right here. I'm going to come back to the brush tool, is that we're probably going to get some price action move up. We're going to get a rejection, maybe a test back down. We're going to get a rejection. We're going to come up here all the way up to, we could likely come as high as $47,000. I don't think we're going to get there in 2023. I think we're likely, go somewhere in this region though, and then reject back down and then find a new low and then have our rocket ship in 2024 into 2025. And that's because why am I saying that? Is it, well, let's go ahead and zoom back. Let's go to historical analysis on our chart, which is what we always want to do. We want to come back here and we want to look at what happened. Well, look at this. When we broke out of here, bull run, but we pulled back, okay? And let's look at where that rejection was. I'm going to do Command F. Hold on a second. I'm going to Command F. We're going to come all the way to this low right here. And look at this. Mapped out on our chart, you would have been prepared. That doesn't mean you need to short absolutely there. It just means that if you're getting this run right here, I'm going to do Shift. I'm going to click on the chart, press Shift. I'm going to measure this move. That's what you do. If you click on the chart and press Shift while you do it, you'll get an automatic measuring tool. Just you have to make sure you clicked on the chart first. Now, that is a 348% move up. That is key opportunity for you to take profits. If you don't take profits, you don't deserve them. You have to take profits along the way. Of course, have a hold portfolio, but every time you're trading, when you're having massive gains, if you're not taking profits along the way, you're stealing from yourself, because if you don't do it, what happens is the market's going to steal those from you, and you'll likely capitulate. At some point, you're going to sell it somewhere where you could have, you're not having nearly the profits that you would have. So this is mapped out. Now, when we're coming down, I'm going to continue here because we only have about 5 minutes left. But what I'm seeing is, you use previous price action when you're mapping, and you see what's happening regularly. And we can see here right now, we have this likelihood in 2023 to push up, which is a bullish trend. Absolutely. And I would consider that as part of the bull market. But there's going to be a midterm or smaller trend, bear cycle within that, because within every cycle, what have I always said? Within every cycle, you have your macro cycle, and then you have your midterm cycle, and then you have your micro cycle. So you have this macro trend that you're in. You have your macro trend that you're in, but then within that, you have this same pattern playing out where you get this reversal, where then you have your micro trend bear cycle. Okay. And then that reverses, and then you have your micro trend bull market, so you have cycles within cycles. Now, before we leave, let's do a couple other coins. We're gonna do Atom. I saw some people post Atom, I believe. I'm gonna scroll back here. Did I see Caleb F in chat? Caleb Franza, what's up, buddy? Thank you for tuning in, man. I'm gonna be having him on the channel here at some point. I don't know where these alts are. I'm gonna do. Let's do Link actually. We're gonna come over here, so you can come up here on the top left and do it, or you can come here on the top right, do your little hamburger, set up your list, have the assets that you look at, have multiple charts you can look at. In this case, we're gonna pull up Link. Now I'm going to right click, remove all drawings. This is what we're going to do. We're going to do a turbo session here. I'm going to turn off this. We're going to do a turbo session here with quick keys. That is not a good chart. So let's go to Link. Let's go to Binance. I think it will be a longer chart. Yeah, so auto. So now what we're going to do here, I'm just going to very quickly just do Alt J, tops and bottoms. Alt J, Alt J. Okay, let's see. This is a very key zone. Very key zone right here. Now we're gonna do from the top, Command F, all the way down. I'm gonna pull that. Now we can see this level. Now, one of the other things I'm going to do is I'm going to do a fib from this midterm trend. You don't just need to do Fibonacci's from the macro. We come here. We're going to click on that, Alt F. We're going to come down to the bottom. I'm going to draw this across like this. Now what we can do, now look at this. This is what I want you to see. Now we've mapped out, this is the area of interest right here, okay? So, and of course, we need to look at what's happening. Okay, now I'm going to, I forgot to do this, Alt T. We're going to do this. We have a sort of trend line here. Look at that. This is broken out and tested it, but we have other trend lines that we can find within this. Alt T. Yeah, okay. So now what do? I'm going to make my bearish resistances red. Boom. Boom, boom. Now make this red. Now we are fighting at this level right here. And now what we're trying to do is figure out where can price action go from here for Link. Well, we have this levels mapped out. We have this key sort of level of resistance, which was a lot of price action through here. This is a lot of support. And so this is going to be a very interesting zone because it's not only like, if you think right here, we have this sort of, I'm going to double click on that. Now I'm going to make this a thicker line so we can see it. I'm going to make it a brighter red as well. So we've got a lot of work to do here. So price action right now, when I'm looking at Link, could very likely has some very key targets. So now let's come down to the 2 hour. We're going to try to map out where those targets are, where it can go. So now we can do Alt J. We're doing this right, just basically, we're doing this right at where previous price action tops were. Right there. Now we have one right there. We have another one right here. And now what we can do is we can come here from this top, Alt F for Fibonacci, pull this down to the low, and there. Now we have some targets to look at. There we go. Now we have some targets we can look at. So what I'm looking at right here for Link, just doing this basic TA, and you saw how quick that was when you use quick keys. You saw how quick it was to just map out certain levels of previous price action tops, even on smaller trends, previous price action bottoms, and then marking out some zones, doing some quick Fibonacci's and a couple diagonal trend lines. Now I have a map of where price action likely can go. So what I'm seeing here is if we maintain bullish movement, is maybe a little pause here, and then coming up, finding resistance here at the zone at about this is about the 770 to 786 sort of level, 791. This is a key resistance right here because this is a Fibonacci sort of retracement from the previous local high. Maybe a pullback right here. And what I'm looking at this pullback, you see my crosshairs. I'm going to pause my drawing there. You can see my crosshairs. There's levels right here, here. This is a level that's very likely to pull back and then sort of fight this level and come up from there. So this is sort of my zone. This is my target that I'm looking for right here, looking in this zone right here is my target. And then what I would do is I would find a couple of midway points to ladder my exits on this. So this is how you do very quick TA to map out where you're going to go based on previous price action. It's that, I don't want to say simple, but that's how simple it can be. That's how simple it can be to utilize these basic tools using TA to use the map of previous price action, to use historical ideas. And I didn't even use any indicators in this. I mean, other than thinking about Fibonacci as an indicator, I used only price action tools to get a map of where we're going. And then in another video in the near future, we're going to do a video on how you use indicators to then level up your game, to then also see where the momentum is shifting, in addition to just utilizing price action candles, trend lines, support, resistance, all these things which are critical to your success in basically just traveling this journey through crypto and investing, this battleground that is trading. Utilize the data that's available. Utilize the basics of what's happening on a chart. Doing those basic horizontal lines, doing those basic trend lines, and then mapping out where previous price action was, so that you can see that in conjunction with Fibonacci's, and you will be a mile ahead of the rest of the pack. But that's all I got for you today. I really appreciate everybody being here. Everybody, please make sure you hit the subscription button down below, hit the like button, ting that bell, follow all these different socials right here. My name's Kelly Kellum. I really appreciate you all coming here, being with me. We're building a community. Big love to all you, wherever you're at. Keep your head down, tune into these, share these streams with your friends, share them on your Twitter. We're trying to build this community with positive people like you. Thank you so much. Everybody, have a wonderful, wonderful day, and I will see you later. Adios, muchachos. Thank you for streaming with me and watching. We're going to make some profits. Yes, we are. Hey, dude, let's do it. You got this.